What's up? What's up? What's up, everybody? Buenos dias. Good morning. Hope you guys are all having a great day. Welcome to our Wednesday morning live edition daily market commentary. Hope everybody's having an absolutely amazing morning. Had a great trading day yesterday. I have today's not only the live edition. I'm calling it the mask up edition. It's my wife yesterday says. She says, I don't really want to go to the grocery store and wear a mask. It's just, it doesn't, it's uncomfortable. I don't like it. So I said, you need a better mask. Follow the trend. Wear a mask. I just thought it was funny. Follow the trend. See, for trend following. All right, let's go ahead and do what we do every day. If you guys are brand new to the channel, every day we look at the same 12 markets. And the reason we look at the same 12 markets every day is because if you look at the same markets every day, what you don't do is you don't spend a tremendous amount of time. You don't spend a tremendous amount of time in the wrong markets, right? And I think that what a lot of people do is that you spend too much time focusing on finding a good trade instead of waiting for a good trade to come to you, okay? And so that's what we're going to focus on today is just look at our 12 markets and see what comes in. Stop the spread of bad jokes. Come on, I thought that was good. So, all right, I'm going to shrink my face so you guys can see the screen a lot better. There we go. I should shrink my head a little bit. So now we can dive into what we do. So we are doing the S&P first. Let's kick off the ES, as the ES is our kind of for me the bellwether market, the one that I trade and look at the most. And yesterday we talked about this little demand level. And we got a really nice move away from that zone, and it came right back to the opposing supply area that had driven price down into that level. So hopefully some of you guys were able to catch that zone yesterday. As you know, it gave you about a 20-point move out of the level at its peak. It's not quite. I'm sure most of us weren't catching the full 20 points, but it definitely came to its opposing fair price value area, giving you an opportunity to take some money off the table. Now, if you wanted to take it a second time, because it hit the first time, what does it do to that level the second time around, right? Good morning, Sue. Haven't said good morning to you in a while. Great to see you in here, Sue. Since it hit that level the first time, what is it going to do the second time that it comes into to this zone? It changes the way that we take the trade, because a level is a level until it's not. And you can take it again when price comes back into the zone. But what you have to do is you've got to convert it to a confirmation entry, right? It's got to switch to a confirmation. And look at what happens the next time we come in. We cut right through it like a knife through butter. Now, those of you that had taken the short up here off of this supply, you ran right through there and it was a great trade. I am not one of those, because frankly, it didn't set up for the right short. It set up for the long out of here. Nice little profit. And then it came into our secondary level and it got halfway into the zone and we got a really nice move away. Now, this was in the Globex hours, last hour of the day. And then the Globex session was really where we had our overnight move. So you may or may not have gotten in on this one. So yeah, I like that, Justin. Thou shalt respect demand. Thou shalt respect demand. And so price came into this one and we got a secondary move away on that ES level. So both of those levels, pretty good zones. Now I need to remove them, right? And now I need to remove them and take them a little bit outside of this purview. So what I'm going to look for now is, where's the next opportunity for a good entry? Well, if I go to my 4-hour chart, which tells me, am I a buyer or am I a seller? It's still telling me that I'm a buyer, but we know that our momentum has been slowing down. We covered that for those of you that were in the live trade room on Sunday night. We covered that on Sunday evening. We talk a lot about the importance of momentum and why momentum, really matters. And we're putting in a really, really clean reversal candlestick on a 4-hour chart right now. Now, this is a super young candle, so this doesn't mean anything at this point, but I wouldn't be surprised to see us roll over from here, because our hourly level, not 30-minute, our hourly level tells us that we rallied back up into this area here, which is a bit of an unbalanced wick over wick. But if I slide to the 15-minute, it's a really clean area. All right, sliding to this 15-minute, we're starting to come off of this zone. Now, if you wanted to take that, a short on here, and you say, I think it's going to continue to come down, you could theoretically get short below maybe this 615 candle. You could get short below that 615 candle's low right here as an opportunity to get short, and then your stop would just go above that candle's high. It's not quite a clean breakout. It's closer to a wick over. It's closer to a candle to candle style of trade, but it does give you an opportunity to get short and kind of ride that thing down a little bit. Now, if I do get short here, where does it take me down? Well, I do have some demand right here, and this demand has to be respected. The reason this demand has to be respected is the time of day that it was created. That's a London Open area of demand, which is typically one of my favorite times of the day to look for trades, is right in that time of the day. And you got a decent move away from that zone. And so if you take a short in here, I would anticipate that you would want to take profits very quickly. It's not going to be one that you're going to hang around and see if it's going to work. You'd want to take profits pretty quickly, or at the very least move your stop to break even pretty quickly. So this is a good demand based on the time of the day. This is better demand down here based upon location, right? This location is better. And the reason that this location is better is because you have you've got an area that's closer to the pivot, right? I love those rally-based rallies near a pivot low. Ingrid said, would that 15-minute supply zone be a confirmed short? So if you took this, it's already been a short, and you could theoretically take it again on a confirmation entry if you want to. My problem with this in taking it a second time is that if we come back up into here, that tells me if we get higher than this candle's high, what does that tell me about this pivot high? It tells me that this pivot high is a wasted pivot high, and that the demand below here is that much stronger because it's creating new highs. So if we get above this candle's high, then that's a wasted pivot high. I don't know that we'll get a reversal off of here. That's my biggest fear of taking that short. Not completely against it, but I'm certainly not for it. Now, I will say our weaker market, which frankly is right now the NASDAQ, might be a better play in that case. So let's see, back to our 15-minute. So on our 15-minute, like I said, we have a couple of areas in here. I might even say it makes sense to do something more like this, where this becomes a confirmation, and then this becomes a limit entry right in here. Now so the rules would be that this would be a confirmation entry right here. Now, if we get any basing between this first level and this second level, then it would force this level down here into being a confirmation as well, right? And that would also, if we get below this low, what would it do to our 4-hour chart? Well, if we got below that low on our 4-hour chart, if we get below here, then by definition, I'd have a lower swing high and a lower swing low. So this 33.20 is kind of a pivotal price point from a trend direction standpoint. So we have two areas of demand in there, but both of those areas of demand, I will say, in my mind, is a little bit suspect because of the momentum shift that we're seeing in all of our equity markets. Does that make sense to everybody? I would say give me a green check, but I don't think you can do that on YouTube Live. Let's move over to the NQ. So in our NQ position, so looking at the NQ yesterday, we had talked about the fact that the NQ was fairly weak. We'd also talked about the fact that we had set in a double top pattern and a tremendous amount of weakness inside of here. Now, that's why we set up this supply area as a potential reversal area. Now, by the way, that was a really clean level, really nice rally base, very strong drop. Confirmation entry, however, because our big picture trend was still up. I moved to the 4-hour chart, and I look at that big picture trend. Is my 4-hour trend still up? What do we think? Has my 4-hour trend changed a little bit, right? Our 4-hour trend has definitely shifted in that direction because we got lower than here. This was our pivotal line in the NASDAQ. So if I'm going to go short, actually, in my mind, the NASDAQ might make the most sense. Now, I did have a breakdown set up right there at 10,878. So we had a breakdown there set up at 10,878, but we were missing a key element of that breakdown. A key element of that breakdown was the basing before the level, right? We got no basing before the level, and so it didn't give us that quality entry for us to have the opportunity to get short on that zone. So now, what am I looking at? Well, I think we could be rolling over from where we are right now. And so if you wanted to give a short a try, what's the word I want to use? A very, I'll call it a speculative trade, would be just to get short below about 10,952 with a stop above 10,993. Yeah, Ingrid, that's a good name for it. It's a peekaboo, not a false breakout, because it's not a breakout, right? But it is definitely a bit of a peekaboo. I like that. I might steal that one, Ingrid. I don't know. I just may steal it. All right. So if you're a lot more speculative, a little bit more aggressive, you may want to take just a little breakdown here, because what you're anticipating is price hitting here and then rolling over and continuing to fall out of that region. Prairie dogs. That's actually really good, Dennis. I like that. So if price continues to roll over, where does it go? Well, I think there's a really good level of demand down here. This area down here, I think, is a really good level where we could see price drop. Ken, I do see that wick over wick. I was actually just going to get to that one, so good eyeballs. Oh, wait, 11,087. Maybe I don't have that one. I was actually looking at this one right in here. Is that on the 15-minute, Ken? Maybe I'm missing it. This one right up here. This one right there. Is that the one you were looking at? Yeah, so that could be a level up in this region. I think that in order to get there, though, we'd have to get through some better ones. And the ones that I like a bit better is this area right here. So if we pop up, keep in mind this unbalanced wick over wick, right? So keep in mind that unbalanced wick over wick if price pops up into that area. All right. So that's our NASDAQ. I think the NASDAQ is we're in a downtrend. It's our weaker market, and we could see price continuing to roll over and to drop from this zone. Next, the Russell. So in our Russell level, we did this. This was nicked by a tick. And you can put whatever word you want instead of nicked. But this is frankly just frustrating. Price came super close, and then you got a decent move away. Now, you didn't really get a great move away. It wasn't even a 2-to-1. But this forces you to change your entry type to a confirmation. So the next time price comes in, it just cuts right through it. Doesn't cost you anything because there's no reason to have gotten into that trade anyway. On our 4-hour, the Russell's been our strength market recently. And so once again, this becomes a pivotal line. 1567 is pivotal in here, because if we roll over and come below 1567, then I'll have a higher swing high and a higher swing low. Okay? And so when we are looking at that as that higher swing high, higher swing low, that would tell me, okay, it's okay to get short on a breakdown. We're not there yet, right? We've not really gotten the reason to get short yet on a breakdown. So what I'm going to do, let me pop out a little bit and go look at that old hourly supply. So we have hourly supply right up in here, which is it's a really clean wick over wick just below a pivot. So that's actually really clean supply, 1615 by 1621, and that is above us. And that's a level that we drew a long time ago, but we left the level on the chart. Now, by the way, do I think that there's still orders left from the creation of that zone? There might be, but more importantly are there going to be enough levels that were created after that zone was formed, right? And so what that does is it takes away the possibility of a long right here, right? If it wasn't for that zone, I would be looking for a breakout to the upside above 1605, because then I would have a good room move up. But I don't have the room to roam because this is actually pretty good area of supply. Now, in an uptrend, that area of supply would have to be a confirmation entry. And so we've really just started going totally sideways here on the hourly chart in the last few hours on this one. So I'm going to identify very similarly to our level in the S&P, this area right here for a potential reversal in the Russell on a 15-minute. Let's see. How are you feeling about the wick over wick unbalanced on the 1 hour? 33.47. Let me go back and take a look at that one. All right. So there's our levels on the Russell. You're talking, real trading 24/7. I guess you're talking about this one here. Yeah, I already covered that one. Real trading. That we're looking at it more as a confirmation entry, and we looked at it actually on the 15 as a potential level. So let me change my color on here. So yeah, those are levels that we had already covered. That's all right, no problem. I want to make sure that I hit it again, so it's still out there. All right. So those are our major equity markets. Let's take a look at the Dow Jones. The Dow Jones, I haven't looked at this since our Sunday night session. We had a breakout trade from that Sunday night session, which went over pretty well. Yesterday's drop off came back down below that area, but this was a breakout to the upside. And that was an older set of lines. If we come down in this one, you have the same area of demand here as you. Oops, that's not what I wanted to do. You have the same area of demand here as you have in your other markets. 26,798 by 27,667. That's a decent area of demand, close to a pivot where there was a pretty nice move away. We are sitting actually up in the same supply area, same rough moves that we had in the S&P. On this one, if you wanted to take a short, this actually may not be a bad setup. If you want to take a breakdown below here, you may get a little bit of a run down through here. Okay? All right, so those are all of my equity markets. Let me make sure that I get you guys those screenshots, and I'll post them into the Traders Army trade feed as well. So I'm double tasking over here. So any questions on equities before we pop over to bonds and commodities? Now, I'm not going to go through all of my commodities. I'm only going to go through oil and gold because I've got a hard stop today at 7:30. I got a hard stop today at 7:30, and I will go through it then when we get to those. But I will still share my screenshots so that you guys have those. And remember, those screenshots, for those of you guys that are regular Traders Army members, we share these screenshots every day. So a lot of people, they get a grid of here's the levels of supply, here's the levels of demand. What we just try to do is just give you the full. We just try to give you the actual chart itself. So there's the screenshot in there. And I just posted it in the trade feed for Traders Army members. All right, so there's our equity levels for today. Let's move over to commodities. So in our commodities trade, so our crude oil level yesterday, we had a really nice move off of our 15-minute zone, confirmation entry. Price came into the zone. We got a really strong move away. Hopefully some of you were able to catch that and pull out a little cheddar into that level. Now, what made this level work out pretty well was the fact that we had selling pressure on those two wicks coming up into it. So I felt better about it because we had two wicks that, in this one, I really felt like I had missed out on the trade right here because it was a confirmation. And then that third one came up into the halfway point. So that was a really nice move away. Traded halfway into the level. Technically, it's still a zone. I remove it. I don't want to take it a second time. On my 4 hour, we are very much entrenched in kind of a sideways price action. Technically, I've got a lower swing high. And technically, if we get below here, you'd have a lower swing low. It's pretty sideways, right? So being as sideways as this price pattern is, we would have to say what's our next area of opportunity on this position. You know, you can come down to here, and it looks actually very similar to our equity market reversal levels. So to execute a confirmation entry, Hemant, what you want to do is you want to have an activation rule set up, and then you use a stop limit entry to enter the trade. So I would have an activation rule. Let's say that this was a confirmation entry. I'd have an activation rule set up here that says if price trades at or below 41.76, activate the trade. And then what you've got another one that says if price trades below 41.71, cancel the trade. Now, once you say if price gets below 41.7 at or below 41.76, activate the trade. The trade that's activated is a stop limit entry. And the stop limit entry is buy with a stop of 41.81 and a limit of 41.81, and that gets me into the trade at exactly 41.81. It minimizes the chances for slippage. Now, if you want to give yourself some more wiggle room so that you know you get filled, you can do a stop limit where it says, okay, activate the trade at 41.76, do a stop limit entry with a stop at 41.81, the limit at 41.84, right? So now you've given yourself a good wiggle room where you're going to have the opportunity to actually get your order filled. So it's an activation rule followed by a stop limit. That's the way that we enter those trades. Let's see. Crude oil inventories at 7:30. Right, yeah, crude oil inventories. I think this is far enough away that we won't have to worry too much about it. I think that I wouldn't take a breakout above here. To me, when you get crude oil inventories, what you oftentimes get is a big wick up, a big wick down, and then you get price just chopping back where it was. Oh, absolutely. Yeah, it can whipsaw, as with anything can whipsaw. But it gives me a lot better opportunity to get in. Now remember, in a confirmation entry, if it goes below our farthest line in our area, then it will cancel the trade. All right, next, gold. So gold has gotten weaker, no question. So we drew this line here yesterday because we said this would make a good breakout in gold to the downside. We were looking for a short in gold yesterday, for those of you that watched our DMC. Unfortunately, I did not get quality basing to allow me to enter the trade. And a lot of you might say, well, Chuck, we had basing right here. That should be enough to enter the trade. It's not. And the reason that it's not is because look at all the basing I had over here, right? It was right at the level. So I would need to have basing right here at the zone in order for me to get in. And so I am not going to take a breakout in that scenario. I'm going to wait for them to retest. Now, I did wait for the retest yesterday, and it'll come tomorrow. And then, if tomorrow never comes, as Garth Brooks would say, I'm still going to be waiting. But I think that's a really nice level. Now, that wick over wick right there occurred at the breakout, and it's a prior area of support. And so that level I really like for a potential reversal. Stop would have to go somewhere up in here in that position. Now, what did that do? Well, that took our 4-hour and it switched us to a downtrend. So our hourly levels of demand are now confirmation entries only. So this one blows right through without any chance for an entry. This level here, the 15-minute, blows right through without any chance for an entry. So now, remember, all of our demand levels had to be confirmations at this point because our big picture trend is telling us to be sellers. So since our big picture trend is telling us to be sellers at this point, we would now look to the fact that I have a little bit of this pattern kind of forming in here. Now, I'm not going to be taking the breakout of this triangle pattern. So, John, it might have been acceptable on the 15-minute. So if you wanted to take it, I didn't look at the 15-minute for basing. You're talking about the basing right here. I didn't look at the 15-minute because I had drawn this line on an hourly chart. On the 15-minute, you bet your assets it was quality basing. No doubt. It was very good basing on a 15-minute. I didn't even go down to the 15-minute because I didn't identify the zone on a 15-minute. And so, as much as it would be great for me to say, look at this short that I called, I can't because I looked at it on an hourly chart and it's just not right. It didn't have the right setup for me to be able to get into that position. Now, if you guys looked at it on a 15-minute chart to identify the breakout, then absolutely it gave you enough basing and an opportunity to get in. All right, so if we continue to come down, how do I get in on the down? On the way down, I think the best way to get in is going to be some sort of a breakdown below here. If we get quality basing somewhere in here, I think you've got an opportunity for a breakdown. Now, this is a decent rally up, so this would be your first profit target if you take that short, which is still, 27 points. So you can still get a pretty nice move out of that level. All right, I'm just going to jump through Nat Gas real quick. Nat Gas, this was our 6-candle rule level that we talked about the other day, where it gave us the 6-candle play. And so in Nat Gas, we're seeing a bit more weakness. I think we could see a breakdown below here today. And I'm just flying through these ones only because I want to make sure I'm running out of time here. We only got 4 minutes left. I told you I had a hard stop today. This breakout here in copper still very much exists. We didn't have any of the reversals built into here. None of them were super clean, although all these selling wicks up here at the tops tells me that there's a lot of rejection happening. And so with all that rejection happening, I think that we could even get some basing and a breakdown below here today. Looking at soy, this was annoying. This one was a breakout trade where we had a nice little move. We had decent amount of basing, and then we gave this a pop above and then just came right down through. So soy yesterday definitely was one of those that if you took the breakout on this one, then you got a little stop out on this one pretty quickly, unfortunately. And the exact same setup was in corn, right? So both corn and soy gave us that peak above. And this would be considered. So we talk about usually when people call something a false breakout, it's not a false breakout because it's not a breakout. These ones were. All right. And so I need to remove those lines at this point. All right, Boz, you're awesome. Thanks for joining. Let me share this grid with you so that you guys have it. You guys can have our commodity levels for the day. Let me post them into the chat box. So there is the commodity levels. All right. Hey, real quick announcement. I just noticed this while I'm doing the trade worksheet or the trade updates. For those of you guys that are Traders Army members, make sure that if you look at the GC trade post in the worksheet that you watch the video. Every one of the trades has a video with it. And then, so Justin put this update in today. So looking to find other zones, not just the zone posted. So make sure when you check that today, you check out the video on there. I literally just saw that as I was posting the levels. All right. Let's see. Let's move over next to bonds and bonds and currencies. And in our bonds and currency market, so yesterday in the Aussie we had, well, let's start actually with the ZN. So in our ZN position, we'd had a potential demand area here. But when I look at my 4-hour, what had my 4-hour done? Lower swing low, lower swing high. Now we talked about the fact that this was a bit of a head and shoulders pattern and that we anticipated this short. So if anybody rode that short down, you got a really nice move. Then it came into this area of demand. Well, this area of demand had to switch to confirmation because our big picture told us, don't do it. Don't even try. And it just blew right through that area. So now I like this right here as a much better entry. And I like the time of day that it was created. Okay? Awesome, Sonia. Love it. All right, the Aussie. So in the Aussie position, we had a bit of a breakdown here in the Aussie. Price then came into the 1-hour area of demand. And if I look at the 4-hour chart, my trend is pretty much sideways, although we do have a lower swing low and a lower swing high. And we saw that price gave this a really quick touch and go back to this area. So it kind of jumped between this little breakdown for the target and then right back up to this breakdown before then price coming down through the zone. All that to say that I think that, once again, the better opportunity is for price to come down. Okay? Jason, yeah, for the on the member side, we got a 2-hour session Sunday nights, we got a 1-hour session Tuesdays, we got a 1-hour session Thursdays, and we're actually starting, and then every Wednesday we've got a 1-hour session as well. But actually starting next month, we're starting to do an active investor session on Wednesday nights where we don't have the Q&A. So every Wednesday night. So Sunday nights, Tuesday mornings, Wednesday nights, Thursday mornings. All right. So that's the level. I think you could still look for a breakdown here if we get quality basing. In the euro level, same thing. We looked at the same level in the euro that we had in the Aussie, and then that just kind of cut right through here. So as I'm looking at where's the next zone, I think that same breakout area that we just talked about is still valid inside of the euro, where it's not as valid in those other markets. Canadian dollar, we didn't have anything anywhere near our levels in the Canadian dollar. Our Canadian dollar demand is down here, or our support, if you will, is down here. I would say that this is a rejection of price. So this line is a price rejection that I would be not surprised to see us base in front of and break through with a quality upside breakout. So of all my currencies in here, okay, that may be a good one to jump in. All right. I appreciate that, Brian. Yeah, we certainly don't want you to have to sell your firstborn. If any of you saw our Dwight Traderman video yesterday, that guy's awesome. So in our Great British Pound, we have two, this area up here where we had a little bit of a double top. We jokingly call that the Batman cowl because it looks like the top of Batman's cowl helmet piece. But in reality, what it shows me is that there's rejection. There's price rejection up at that area, and we're seeing some weakness in each of these markets. And all of these markets showing the weakness in the currencies are stemmed from the strength that we got in the dollar. And so I think that we could see this continue to come down. Be aware that we do have some demand right here. And if you want to take this demand, it has to be a confirmation long because of our directional short overall in the big picture. So I would come to here as a potential reversal trade on our 15-minute chart. And then last and certainly least has been the Japanese yen. We have not gotten great trades out of the yen lately. And I don't mean least, I don't mean anything against the great country of Japan. But we have basing in here and then the breakdown right before the level. Now that we've actually had that, that's a really clean breakdown. You can look to a reversal area here now for the short. NQ is on the move. Yep, there we go. So if anybody took that break, did anybody take the breakdown here of this move here? If you did, you've got a little bit of a move down there. Remember, I would look to, your first target down here at around 10,915, and then that should give you, 30 points on the Nasdaq. It's not such a bad day if you can pick that off. 10,915, 30 points before the market opens, I think is a pretty good little jump if you guys took that little breakdown, because like I said, it just feels like it's ready to roll over. And sometimes there's nothing wrong with saying that word in trading. It feels like, and it's not terrible to say that. It's, you've got to have over time, we call it the 10,000 hour rule. You got to have a little bit of a gut in this thing. So, all right, I'm going to throw this last one into the chat box. I want to thank all of you for joining us today. You guys are amazing. Do me a favor, share this live trading session with your friends and your trading compadres, and I look forward to seeing you all again soon. TA members, I will see you in tomorrow morning's live trade room. I don't, Pia, I don't think that TOS would change. I think that part of the reason that Schwab would buy would buy TD Ameritrade is the platform. I go back to looking at what happened to TD Ameritrade's other platforms when they bought Thinkorswim. Because remember, Thinkorswim was purchased by TD Ameritrade. Thinkorswim was its own independent broker, and TD Ameritrade at the time had a platform called Trade Architect, which Thinkorswim essentially replaced because it was that much better of a platform. And so I think you may see something similar with Schwab. Ingrid, Chuck, you would not do breakouts on 15, only 60. No, Ingrid, I'll do breakouts on 15s. But I'll do breakouts on 15s, but I have to identify them on 15s, right? So that gold trade, I didn't identify that gold breakout on a 15, which is why I wasn't able to take the basing of the 15. Okay? All right, everybody. I hope you have an amazing day. By the way, follow the trend. Talk to you soon.